and then in credit insurance company Kofas, so almost 10 years of insurance experience. And that's why I'll tell you today about D&O insurance and Lithuanian example. So how actually we are dealing with those D&O cases. So I'll tell you today, so what are the most typical claims that fall under the coverage of D&O insurance? What usual insured persons, so directors, uses D&O insurance? What the most popular losses are usually covered, and what are the most popular exclusions? How the claims are handling, behind the curtains of insurance, and we will provide you some user guide, so some tips and tricks how to use D&O insurance, how to benefit from the coverage, and some successful D&O examples. So I'll tell you everything in the eyes of insurer, not as a lawyer who represents a director or the company, but usually as a law firm we are retained by foreign insurance companies because they do not have their presence in Lithuania, do not have local claims handlers. That's why we are helping them to handle claims. So we see and we handle those claims as insurers. So to begin with, so why Lithuanian example? Why we need to talk about it? It's because we have D&O insurance and we are using it in the market so for like 10 years already. It's now, I should say, become a quite popular product. We have quite many foreign insurance offering that product. So Lloyd's Market, AG, Chubb, all the big names. And we have some local insurers who are offering D&O insurance. So the companies have a variety of products to choose. And the product can be offered to a very wide range of companies. So from small to large companies are buying D&O insurance. So it used to be, a normal product, companies buying property, general liability, and D&O insurance. So it's not something, it's usual market practice now. And so product is quite well recognized in the market. We have some even court practice. Of course, the product is not so developed, for example, as in UK, but we already have some examples to share. So D&O insurance, how it should be or is understood in Lithuania. So I would say it's a risk mitigation measure at first, and what should be understood, and insurers want that it should be understood like this. This is not the only one risk mitigation measure. It's only one of many other corporate risk mitigation measures, which helps to reduce consequences of liability for the directors. Also, D&O insurance is beneficial for the directors because it provides protection for financial assets. So directors can receive protection for defense costs in case those claims are brought to them. They can receive financial protection for damage. Also, one of the most important benefit is peace of mind. So directors don't need to think what consequences can come from their decisions, but they can focus on developing business and be sure that all damages that may come will be covered by insurance. Also beneficial for companies, the same financial protection, because if companies will need to compensate defense costs or damage for their directors, they can be compensated by insurers. Also beneficial because investors may ask the company to have D&O insurance because some investors sometimes request a seat in the board and then they may require to have D&O protection, or some investors ask the company to have D&O in order to the company's financial assets to be properly protected. And also now, for example, in Lithuania, it's very popular benefit for the companies in attracting new talents, because, specialists, they are acquiring insurance, as the normal package offered to them to start new role in the company. It should be taken into account that this is not a cure for all diseases. So, there are insured events, there are non-insured events. So when the product is correctly understood, it can be used to provide all those benefits. So the main aim and core purpose of D&O insurance is it's a mechanism for compensating defense costs. Protecting the director from, unjustified claims. And only then, D&O insurance is aimed to compensate damage. And is this so because, for example, in Lithuania, we have very low percentage of cases which are successfully against directors. So usually they are ending only by leaving director only with defense costs, incurred defense costs. So. And insured persons. So in Lithuania, actually the most popular insured persons are definitely CEOs. In the second place, board members. And now, actually, in the recent years, we have more and more cases when, for example, commercial director or other offices are claimed, usually by the companies. We have also many cases with ex-CEOs when the new manager comes into the company, starting to examine, investigate what decisions were taken by the previous managers, then new claims arises. Also managers of subsidiary companies, also very popular because, when the company obtains D&O insurance, so all the directors of subsidiary companies are also covered. So what are the most popular claims in Lithuania? So definitely, mostly we receive and we see claims which are, never mind, it's out of court or lawsuits. So they are claims brought by the company against directors or officers. So the reasons for bringing such claims, they might be any reasons. So for example, selling or buying goods, services, property, shares. So recently we had a case when the company was producing wheat and they sold for the next year's harvest, and the company later brought a claim stating that wheat was sold at a too low price. So director was claimed, the claim was around 50,000 of damage. Also failure on business expansion. So the companies decide, to open subsidiaries in other countries, to start new type of business, a new sector, and the business fail. So also a very usual type of claims in our market. Failure to initiate insolvency. So in Lithuania, it's a burden for the director to initiate insolvency procedures for the company in timely manner. And also we had a case when the CEO was late to initiate bankruptcy for half a year and received a claim from bankruptcy administrator. They were requesting damage for the company that it generated, for that half of year when the director was late to initiate insolvency. Also using company funds for personal benefits. So the most usual cases, buying cars for the director himself, for wife, for children. So actually those claims can be brought due to any everyday decisions. Not only when the company incurs damage by itself, but when it, for example, had to compensate damage to third persons. So, cyber breach cases are very, very typical example. Or when the company's contract partners are acquiring damage because the director decided to terminate business contract. Also, new trend, I would say so, in the past few years, penalties and fines, which are imposed on the companies. For example, Competition Council, Data Inspectorate Authority, imposing penalties on the companies, and then companies are bringing recourse claims on directors. Also, derivative suits, I would say it's in a second place, you know, in the scale of popularity in Lithuania. So we had such cases when, you know, shareholders can bring a claim against director in the name of the company, you know, for the losses incurred not shareholders, but the company. And the less popular, rare cases are creditors' claims, you know, when the creditors, as third persons, can bring direct claim against director, usually during the insolvency procedures, or state claims. So it's very, state claims may become relevant, you know, when the directors now are applying sanction regulations and criminal liability can be imposed on directors. So in that cases, state may claim actual damage directly from the director. So for example, in Lithuania. And employment practice claims, these claims are allowed by the law, but they're still rare. We are expecting them to come in the future. And but what are trends? You know, it's not only in Lithuania, but in UK as well. We are speaking with insurers. So what we are waiting the most? So employment lawsuits. So any type of claims, for example, when the employee disagrees with that he was fired. Cyber breaches, of course. You know, in insurance, we are saying that. D&O claims are coming 1 or 2 years after an issue arose. So if we had, you know, for example, COVID cases a few years ago, you know, pandemic started a few years ago. Now financial reports of the companies of 2021 are now being confirmed. So we are waiting COVID-related D&O claims this autumn or next spring. So the same is with the breach of sanctions. Now, directors need to implement the regulation. Nobody understands the regulation. Nobody, yeah, actually, yeah, it's very difficult, you know. But the directors need to take decisions, and only maybe after a year we will see whether those decisions were correct, and then. 1 year later, we will see new claims coming for the directors due to these reasons. Of course, and investigations initiated, pre-trial investigations, and any, you know, supervisory authority investigations initiated against directors, board members, or even employees. So any reasons, and that's where D&O insurance provides coverage, because directors, they do not need to be involved personally in this claims, but at least, you know, they need to be invited to participate in the hearing, interview, to provide certain information, and that's why they need to you know, hire a lawyer, need legal assistance, and that's where D&O insurance provide coverage. So the most popular type of losses, as I mentioned, defense costs, so emergency costs when, you know, for example, director is detained, no time to align defense costs with the insurer, need to hire a lawyer very fast. PR costs, so public relations, when we need to save director's reputation, you know, release some public announcement. Administrative fines are in Lithuania, yeah, very popular, but just to keep in mind that criminal fines are not covered, and settlements. Yeah, so quite usually we with the help of insurer, we help the company, for example, and director to find, you know, a solution and to finalize the case without the court with a settlement. So a few examples, you know, of the most typical exclusions. So usually those D&O wordings we have from foreign insurance or local insurance do not have very long list of exclusions, but they have many, a few more than you see there. But these, I would say, the most popular. So conduct exclusion. So it's D&O insurance do not cover dishonest acts, personal profit received by the insured, and criminal liability. And this is general exclusion. It's used in all types of liability insurance policies. And here, as you remember, I said that D&O insurance main core purpose is a mechanism of providing coverage to defense costs. So there is also provided a benefit for directors, because defense costs for the director is provided until his, for example, dishonest acts or criminal liability is acknowledged by the court's final decision. So until that moment, defense costs are covered. Yeah. Also, non-disclosure of pre-contractual information. We have some cases in Lithuania when the companies do not disclose information to the insurer properly. So in order to conclude insurance policy, insurers usually provide proposal forms, ask certain questions to be provided, and you see two examples. These are very standard wording used by many insurers. So one of the questions is about prior claims, whether the company at the moment when concluding proposal form, whether they know about any existing claims initiated against any insured persons. Or the second question, circumstances. Does the company know any circumstances that such a claim or investigation might be initiated in the future? For example, the director already received some oral threats from the shareholders, for example. And Lithuanian law protects insurers, from the consequences if the company do not disclose that information. So indemnity can be reduced, not paid, or the contract can be even terminated. And in this case, we have some Lithuanian case law which tries, it's not very crystal clear at the moment, but tries to protect insurers maybe in those cases when those claims which were not disclosed in the proposal form were public cases, but still I would not say that it's very indefinite rule. Also prior pending litigation. So if the company actually concludes insurance policy, and from the date when the insurance policy starts, so any claims which were brought earlier, or any investigations which were initiated before the inception of the policy are not covered. So it's not more as an exclusion, but boundaries of the coverage. Retroactive date, so if certain retroactive date is set in your policy, for example, 2016, so any wrongful acts which were made by the directors earlier will not be covered. And sanctions. So general regulation applies to insurance companies. So no indemnity can be paid, it's come from the regulation. No indemnity can be paid to sanctioned policyholders. So if the company is sanctioned, if directors are sanctioned, or third persons, who are requesting damage are sanctioned. So no indemnity can be paid. So very shortly, how the claims handling process looks like internally, what insurers are doing. So actually, from the insurance side, it looks very easy. It's not a difficult procedure. So insurers receiving notification of circumstances, and then even if the claim is not yet brought, so the insurers anchoring coverage for that circumstances, and when the claim is coming, even if it will happen after 3 years and the coverage will not be valid anymore, so your claim still be covered because you're notified about the circumstances. So insurer starts investigation requiring insured persons or the company policyholder to provide information as much as possible to understand what happened. And then the first decision you will receive from the insurer will be coverage of confirmation of coverage for defense costs. So the insurer is confirming that everything is okay, so the coverage is valid, and it will compensate defense costs for you, even the claim is not solved yet. And then monitoring the case, communicating, cooperation with the insurer as long as the case is going. And finally, if any claim is satisfied, the insurer is investigating whether the coverage applies, whether there is no conduct exclusion to your claim. So a few tips, for obtaining the insurer. So I will tell a few. So it's very, very important to understand that you need to select an appropriate product. So coverage is not standard wording. It very differs. So the company will choose what coverage they want to buy. That's why you don't need to buy and to choose insurance according to the price. Select what you need and ask advice from the broker who knows the best how to understand and read the risks. So disclose, as I mentioned before, disclose full and correct pre-contractual information because it may have influence to your cover. Make sure that the policy provides advancement of defense costs, to receive defense costs without waiting until the claim will be resolved. Check applicable law and jurisdiction because sometimes we see such policies when there is provided English arbitration court. So it will not be very beneficial for the company if there will be any dispute with the insurance company. When you are using the insurers, of course, notify circumstances, not only the claims, circumstances. Director becomes aware of any threat notification, email, something, sometimes lawyers write legal opinions where says that director may be subject to any liability for the company's losses and notify these circumstances to the insurer in order to ensure protection because the director is never sure whether the company will continue the policy, right? Ask the insurer's prior consent on defense counsel, right? So when you receive the claim, investigation is initiated, so as the insurer to confirm that. The right to defense counsel, your lawyer, budget costs are okay with the insurer. Otherwise, otherwise the insurer may have a right to reduce indemnity. Do not admit liability without insurer's prior consent because it also may have negative consequences to your coverage. And also behave as a prudent and insured. So, there's the rule that insurers like very much. So behave as if you would not have insurers. So be prudent, do everything, and the insurer will not have a reason, to say that you are not performing your duties. When continuing the insurance, so it's a golden rule in liability insurance. Do not change the insurer because there might be certain gaps in your coverage, and if you still need to change the insurer, you're having an offer of much lesser premium or something, consult with your broker in order to avoid those gaps in coverage. It's very important. So, and we still have a few minutes, yeah. So a few Lithuanian cases, so actually simple ones. So those cases were not simple and they were very difficult for defense counsels who defended directors, but they were quite simple from insurance perspective. And you will see why. So the first case, the policyholder was a construction company and they decided to expand business in Sweden. But the business failed after a few years and the company has to compensate director of that subsidiary all the investments the company made during the last year, yes, and because it was their losses. So defense CEO hired defense counsel, insurer agreed to compensate defense costs, and defense counsel managed to agree with the company, actually to provide the company so strong response to the claim that the company finally decided, to finish the case without even going to the court. So this case was quite, it was solved quite in a quite short period, so in a half a year or so. So director, if there would be no insurance, he would maybe not be able to hire such a good lawyers, and the case might have come to the court, and even more defense costs would be incurred in litigating. Second example, so one of the Lithuanian ministries did not agree to pay bonuses for its CEO, but the board actually disagreed with such decision. And when CEO was fired, the board took a decision and paid that bonuses to the CEO. The company then brought a claim, it was a lawsuit directly to the court, against 3 board members asking to repay that bonuses already paid to the CEO. And the claim actually was not big. It was, around 20,000. But those 3 board members, they're very famous politics in Lithuania. And this case was, a matter of reputation. So insurer also agreed to compensate defense costs. And the litigation took around two years or something. And funny was that defense cost was around 100, so 4 times bigger than the claim itself. And PR costs also were quite high because, we needed to rebuild the reputation of the politics. And finally, the case, board members won the case in the appeal instance. So eventually, their reputation were reinstated. Third example, state-owned company, which carries transportation of passengers, and they had, fleet insurance. And one person, he was not even a director. He was from commercial department, and he was responsible for obtaining insurance for those buses. And he decided that there are certain 10 buses, for 10 years there were no claims, no accidents, so. And, property insurance for those buses very expensive, and he decided not to obtain that insurance. After half a year, one of the driver of those buses suffered a heart attack, and the bus was crashed. Some passengers were injured, so the company had to compensate, including the value of the bus, around 100, and brought a claim against that employee. So he was not even a director. And there also the insurer held there. So defense counsel were hired then by us to that officer. So because it was employee, his liability was limited. And we, on behalf of insurer, managed to settle with the claim and agree that they will not bring a lawsuit to the court, but we will compensate them 15,000. And what most importantly, we saved CEO from additional claim because, the limited liability of the employee, and then the rest of the amount could be requested from the CEO, which liability is not limited. So we managed to deal with the case, and employee still working in this company, and everything, was solved. And the last case example, so huge construction company was investigated by Competition Council and found guilty. A huge fine was imposed on the company. And then the company decided to bring a recourse claim against the CEO. So the claim was huge, so around 9 million. And at that time, the policy did not provide coverage for any fines. So that's why I was saying that, when you're picking coverage, you need to think what you're buying, because the coverage is not standard. You need to investigate what your company needs the most. And nevertheless, the policy still provided coverage for CEO's defense costs. So the case was quite long, but CEO managed to defend his liability successfully. So he avoided a recourse claim. His defense costs were compensated. So these are 4 examples. So as you see, they are very simple from insurance side, because insurers are working. Their aim is to provide, decision to provide to decide whether coverage applies to defense costs, and let the insured and their defense counsels to do their job. Thank you.
Thank you so much. I have one quick question for you. What is usually your role as a lawyer in these claims situations?
So they're called role coverage counsel. So defense counsels, they are defending directors, and coverage counsels are retained by insurers as local claim handlers. So we are like, hands of the insurer, doing everything that insurer would do by himself normally if he had a presence here in Lithuania.